Welcome back for another video. My name is Francisco Rosa. For those of you who don't know me, in this channel we talk about real estate and topics related to it. Today's topic, where are we going and looking forwards. One of the challenges that everybody is talking about is how loans have become unaffordable. But historically, we were in an unprecedented time with historically low rates. It will definitely be a few years way into the future before we see those types of rates again. People were able to buy homes in the low 2 and 3%, and those that managed to get fixed rate loans made a great choice in getting fixed rates that not change long term. For everybody else, there's a little bit of regret in not taking action, but all is not lost because home values were quite high and very competitive in getting offers accepted. Things have changed, and obviously the change will really depend on where you live, but if you keep up with market demand and supply, you already know that it is a little harder to sell a home now unless it's priced right. So priced right simply means a buyer sees the value in it and is willing to pay for it. So there's no multiple bid offers or over asking price or contingencies in which somebody was willing to make up the gap difference between appraisal price and agreed upon purchase price. As a potential home buyer, you may be reluctant to move forward and buy a home. But you have to remember that these decisions are not decisions made lightly on a short-term basis. If you're buying a home that you will sell in 3 to 6 years, then you have to make a choice as to whether or not the investment is worth it. But historically, buying real estate has always been a good investment, accounting for the stability of having a place to live, the stability and fixed housing expenses, and factoring in the tax benefits of being a homeowner. If it's a single family or condo, you get a tax break on the interest paid on the mortgage. And if you buy a multifamily or investment property, you get a deduction for depreciation and operating costs, including maintenance, upkeep, and repairs. As a potential investor, you gotta ask yourself, what is a good deal? Or what does a good deal look like? You will know from other people who have bought homes in the past that at the time they bought a home, they would have thought that at the time they might have been paying market price or a high price for the home. But over time, as the dollar is devalued and homes appreciate in value, when you look back, you get to think, oh, this home that is now worth $500,000 was sold for $250,000, and you think to yourself, I would have loved to buy a home at that price. But if you really think back at that specific year that the transaction occurred, $250,000 might have been market price. So it's really no different than looking at market price for a home today. I always tell investors or home buyers who are making a tough decision as to whether to buy or not, that if you look at long-term potential, if you look at long-term investment potential, although you may not be making big bucks today, historically, home values go up a little each year, and you have the opportunity to gradually bump up rents year to year that will alleviate your costs in operating the home so that you can assure yourself that you are covering each year's increase in homeowners insurance, each year's increase in real estate taxes, and any other expenses that come up in order to keep up with the home. As a homeowner, you are responsible for any maintenance issue and necessary repairs when they arise. To end, I have the following tips. How do you know if a decision to buy is a wise choice? Ask yourself the following. If I run into an unnecessary emergency or an urgent need to leave the home, can I sell it now? If you can sell it for what you bought it, then that leads you to believe the home is worth what you're paying for. If you believe nobody else will pay what you're buying it for, then you might want to reconsider your decision. Ultimately, the number one rule in real estate is make choices where you do not lose money. It's one thing to simply get your money back, $100 for $100. It's another to not even be able to recover what you've spent to buy a property. With that idea in mind of expecting the unexpected or needing to have an emergency exit plan, always think, other than owning and being able to pay for the home, can you immediately sell it? Can you immediately rent it to cover the expenses? Or can you use it as an Airbnb or short-term rental? If you can turn it around and sell it, you found a good deal. If you can cover the expenses with the rent, you found a good deal. Everybody has different niches they like to follow. You have to find one that you may like. And if you don't know what you like yet, you may as well dip your toes in and start trying. And ultimately, what you decide to do and what investment path you decide to follow is in your hands. Good luck, and thank you for watching.